Welcome to tonight's Nightly Market Intelligence Report, everyone. Today is September 19th, 2013. The time is 7:02 p.m. Eastern Standard. Today's action was light across the U.S. markets, a very small range day with a down close on the Dow at 15,636.55. The smart money bias market trading call remains at a long level 9. I repeat, at a long level 9. The reason why this is in place is because the futures are still much stronger as compared to the equities as far as the indicators and the volume behind them, as you'll see later on in the presentation. Okay, looking here quickly at the levels that we have broadcasted out. We have a resistance level here that still exists on the Dow at 15,608.44. because we need 3 closes above this level in order for this to be considered support. Now below that remains the 3 levels stacked one after the other at 15,503, 15, 15,381, 36, and 15,3, 112, and 86. Again, a serious lack of volume indicating one way or the other what is the smart money up to in the most recent trading week. As compared to the futures, we don't have it. We do not have any significant volume that's come to the 21-period average daily volume in red. So basically at this time, the futures are still moving the equities market to the upside. Let's take a look at these indicators, and as you can see, we have the money flow index, which is just about tapped out here. A little more room to go at this point right here, and possibly something just a tad higher here at this point. The trend line violations were clearly what signaled the trend in play after out of market net neutral here, and the confirmation as well from the money flow index side. Again, here, looking at the check and money flow in this particular instance, we have a lot of room to go to get back to this peak and even to here. So if the baton continues to be passed off from one to the other, and this moves up to support the prices, we will have the smart money behind it. Here, stochastics momentum just getting into overbought territory. EMAs are still strongward to the upside, and here very short-term negative divergence on the advanced decline oscillator. Nothing to be too concerned about at this point. A temporary peak right here as compared to the trend line upper slope connected to here and here on the prices. Still some room to go on the MACD, which is positive for a potential rise in trend at this level, and according to this peak would be the most probable area that things could stall out, looking at this indicator in isolation. And so there you have it. All the support levels are there. The resistance level still stands until we get another close above that, which could be on tomorrow's session. Getting out of this and into the sectors and the ETFs that are traded against them. 40 Financials and XLF, again, we are along with the well-placed stop right here on 10 Energy and XLE. We are long again tonight. Excellent performer here. On here, 25 Consumer Discretionary and XLY. We are long again tonight. Great trade in play. Here, what an incredible trade in play right here. Up 26 points tonight. Gave 2 back today on a down close at 16.17 right here on 35 Healthcare and XLV. Still long with a well-placed stop. Here, no call on 55 Utilities and XLU, and here 45 Infotech and XLK, no call because of the volatility. And here 30 Consumer Staples and XLP trading up strongly. We are long with a reasonable stop in place, and there we are, 17.75 tonight, up right here as well. We have a lot of accumulated points across the board here, traders and investors. Again, we were long here, got out, got back in long right here on the report for 9/16, and remain long again tonight. And 50 Telecom, long, getting in right here, looking to be in at the most opportune time. If this continues to trend up, we have very little resistance to get back to this point right about here on and around 7:30 and open at around 159.70, possibly 158 on a rally, long with a well-placed stop here. And let's take another look at 20 Industrials. I talked about this on many reports and how this shot right through superior resistance, and this could be the signal, the flare that had gone up as a prelude to the rise in the U.S. markets, and that's exactly what did happen, closing up today marginally, 437.68, again, contra against the Dow index. Up, the index was down, up 26 points tonight. 40 financials ended up right back where we started. Let's talk about futures. Going through a lot of information here tonight. The near contract month is December 2013. The new overnight session is open, trading marginally down, marked to the market at 716.50. Again, that's 716.50 right here, trading the near month December 2013. The volume is very evident here, which is not evident on the Dow. Again, pushing the overall U.S. markets to the upside. The gap away was a signal of a lot of strength at this time. Looking at the levels as we blow them up, we now have 3 closes above, which was one support at 16.95, turned to resistance because of today's session's close. 1, 2, 3 above this level. A new resistance level established at 16.95. Excuse me, yes, support level. Let's change that. And the only resistance that this market has right now, in fact, please excuse the error. We have a lot of information to get over here in a short period of time. The new support level at 16.95 sticks, where we have some resistance, is only laid out by this bar right here, just from the previous session, which closed officially today at Eastern. Now, that is 9/19, closed at 17:15 hours. That open of today's session's close was 17:18.50. That is the only resistance that exists within the S&P 500 mini futures right now. You have just gone through the absolute levels that exist within this market. Now, let's get into the indicators, and you'll see the market difference here. Stochastics Momentum Index just getting into overbought territory as well. A lot of room to go on the MACD indicator to get back to here and here, like equities. And look at the difference here in the Chaikin money flow, trading up again. And look at the short-term money flow index, still heading north at about 10 degrees off center. That is incredible. A lot of strength still within these markets. And because of what you're seeing here on the future side, we remain on the market bias call. The smart money bias market trading call is officially still long level 9 tonight for those of you that are fast forwarding. So looking at real time and what happened today, we were looking for the retracement and we got a piece of it. RN picked up here for me one trade, and there was another that a lot of graduates took later on, right when the market opened. Let's take a look at that and run it down. This is what I picked up right here before the market opened. After the blow off here, the volume associated with that, prices turn right back around. This is where I'm in. This is where I'm out after the trend line violation to the upside, hitting a support level at this point right here, and then prices trading up. So here's a secondary trade that was taken by a lot of our graduates here, slammed right through the same level that was once support, and because of it, with a lot of volume coming in, prices shot down a lot faster to get from here all the way down to another level that I had laid out earlier on. Now, the levels on the 15-minute chart were a little difficult for most beginners and even intermediate people to grasp exactly where to get in for the short. But let's take a look at the macro picture here. We do know that after a strong run-up on a daily basis, we can get a retracement to the downside. The 15-minute charts were strong across the board here with a negative divergence as compared to the blow-off here. And if we take a look at here, a longer-term divergence from the MACD as compared to a sloping trend line that would be connected from this lower price to this higher price. So we have a very strong negative divergence here on the MACD. That cross tells the entire arena of people who are looking at this area that this is the time to be short, according to that indicator in isolation. Here's the cross from the EMAs, and the story goes on and on and on with stochastics here as well. Great setup. Another negative divergence out of Chaikin money flow. And so looking at the stair step up here, waiting for the trade to produce an area to get in. That area was produced, from my perspective, back here at this point when 2,078 contracts were traded getting through this level right here after this volume was clearly the blow off because prices had trickled down from there. That was the time that I got into this trade. And that's the way I saw it. Now, let's blow it back up here so everybody can see this very clearly and move out. In here at 724.25 for 30 contracts short, trend line violation here. Just shortly after that, up and out at 722.50 at 8:31 a.m. within a 1-minute bar. So for today's trading on this end, some of the traders picked up 1 and 2. So here's another 3 points right here, plus 175 from what I got out of this today. Some got out right here and got even more than I did. You're talking about almost 5 points and a single trading day between 2 trades that were identified by the smart money trading methodology that we teach here. Only trading when you're sure you have the largest institutions, hedge funds, the offshore people, the Rockefellers of the business behind you. So for today, 1.75 point net gain times $50 for every full point move in this market is an $87.50 net gain per contract times 30 contracts traded, brought in some good lunch money for $2,625 net dollar gain on the trade. Booked. That covers tonight's nightly market intelligence report. Tomorrow, if prices decide to slam down, I can assure you that the stops that are placed across the board on the sectors and the ETFs traded against them will ring out loud and clear. And I have no problem with taking everything across the board off. We'll see you Sunday on the next report. Good night.